Smart 24, driving business.
Welcome back from that short commercial break. We would want to proceed from where we left off. Of course, talking about the Bitcoin and how it is the index of all digital currencies. Frank, where were you?
Okay, I was still talking about Bitcoin price dumping for a while. Yes, Bitcoin is going to dump because I see that Bitcoin is dealing with what we do call a corrective kind of pattern. And this correction is what I was discussing, whereby I was anticipating that price is likely to come to the downside slightly. Let me show you what is really going to happen. How much that tool is kind of disturbing. Okay, so we are anticipating that BTC has to give us that kind of a move right now, because we are looking at the entire thing this to be a move to the downside, and this that we are developing right here is a correction, and then anticipating for at least a dump to the downside before we see any other move on BTC. Now, someone is asking a question: what's the bullish scenario before anything like a dump happens? Is there a possibility of a bullish scenario? Now, for a bullish scenario, the possibility is only one, and this is the one that I'm going to discuss. It's only and only if Bitcoin comes down here, some great news kicks in, and then goes back up only to mitigate this order block right here. But still, even if that order block mitigated, still it will be a correction, and I will still be anticipating more to the downside. Now, some people are talking, actually are saying me talking about Elliott waves, but they are saying we haven't seen you using the Elliott wave tool. Let me try to draw the patterns that we are anticipating on BTC within this chart, so that we really understand our anticipation right now.
So just for context, as you've highlighted that there will be a bull, and it will drop again, do you think it is going to affect the prices of other cryptocurrencies? Because you stated that it is considered the index.
Okay, at the moment you see Bitcoin actually going down, it's an automatic thing for all altcoins to be dumping. So Bitcoin down, all altcoins are going to be down.
So what normally causes Bitcoin to collapse? To increase, decrease? What are these factors?
Normally, the factors, sometimes it's news, sometimes it's the DXY actually being pumped. The moment you see DXY pumping, that causes Bitcoin normally to dump. The higher the price of the dollar, the poorer the performance of Bitcoin. So another factor that can cause Bitcoin to dump is maybe a calamity, that we can get something like a disease like COVID, shortage within the world, or those can affect Bitcoin, just like any other asset. However much Bitcoin is not yet endorsed to be a commodity, but at least we know it has some value. So a price that can affect gold can affect, anything that can affect gold can affect Bitcoin, just like any other asset.
Okay.
Yeah. So if you are to go ahead, this was the bullish scenario, and I wanted to draw for you the waves that we are anticipating for BTC. So we are anticipating that this was a wave 1, this was a 2, this was a 3, this was a 4, and this was a 5. Seen? So those are the Elliott waves that we have been discussing. If we are to get this thing that comes to pray right up like this, now this will mean that we are just receiving what we do call a corrective move. What is a corrective move? A corrective move is the one that opposes that trend. The trend is to the downside with these 5 waves, and now we are expecting a 1, 2, 3 to the upside. So that's a correction. And if it's a correction, we label it with an A, with a B right here, and a C to the upside. But currently, what are we trading? Currently we are still looking for this wave B to the downside up to here, and then we start that move to the upside. This is the short-term bullish scenario if it happens to come. Caught me well. So let me remove this and I show you the bearish scenario if it kicks in within the next days as the DXY slightly pumps to the upside. So I'll go to the lower time frame. Now I'm going to drop to the 15 because what I'm now going to give is what is going to happen tomorrow or a day to come. So you need to pay the attention.
They really need to, because this is valuable information. It's
now,
actually a prediction.
Why is it behaving like this right now? The reason as to why we are watching this behavior is that we got this. Are you seeing that huge candlestick? Whenever a huge candlestick happens in the market, we do call that an imbalance. Normally when price goes to the upside, like expulsive, the way you see this candlestick, price has to come back to cover the imbalance. So Bitcoin is coming back right here only to cover this kind of imbalance that we are having in the price chart. So that's why we are having a bearish move right now. So here, what are we anticipating from this view? We are anticipating that BTC could come back, covers there, and maybe drops the more to the downside. To the hour time frame so that I can minimize my chart. This kind of move can happen, and it has also powers to continue going all our way to the downside. Powers are there. I was actually talking about the CME chart, and the reason as to why I'm anticipating that BTC can actually collapse all the way to the downside is this that I'm going to show on the CME chart. The other scenario that I gave was kind of a bullish and then to the downside, but now this is the downside scenario. If you see Bitcoin giving us this kind of a move and then dumping super, is because we need to feel something on our CME chart. Let me go to my playlist and I see if I can access the CME chart.
So what is CME supposed to be, for context?
Okay, these are the charts of how futures traders are trading Bitcoin. Remember, these are the guys who determine where the price is going to go. The moment these guys want to liquidate a certain position, they move Bitcoin into that position. Okay, I'm going to show you what normally happens. Now, this is the manipulation maneuver that normally happens within the market. This is why you see a trader telling you that, hey, I came after trying to trade something, then they just smashed my stop loss. It's because you put your stop loss where everything is just obvious. Price is driven to that point and then you're taken out. But what they are using is the CME chart, and normally the CME chart, what it does, it leaves footprints of where price is likely to go. So let's just look for one. So let me just put in the word features BTC. I think I'll have that chart. Okay, it's here. So this is the CME chart for BTC. Let me try to make sure that we do have a full screen at the daily time frame, which is the biggest that I normally do look at for daily traders. There is some kind of teaching that I'm going to give to traders here. So I want traders to focus around here. Actually, if my tools are disturbing, let me just access the touch screen of this PC because the tools are slightly disturbing. So if we do have this chart, you can see that right here we had a gap. Can you see that gap? Candlesticks gapped right here.
Yes.
Every time the candlesticks do gap, price normally comes back and fill up that gap the next day. And after filling up that gap, what price does is a continuation to the downside or into the direction of the first trend. So just put it into your mind that every time you do receive a gap, price is likely to continue to the downside. But now, there is a gap down here which is not yet filled. This is why I still anticipate that BTC has powers to come down here.
Okay.
Are you seeing that gap?
Yes.
So BTC will need to come down here to fill up that gap. That's actually mitigation of what we do call an imbalance. A gap, a week, they are all considered to be imbalances in price action.
Is it a common habit? Because I'm noticing gaps.
Yeah, it's a common habit, but these guys who are trading features, they use these ones to be their footprints of where they want price to go. Okay. So this means that around here, these guys bought a lot of Bitcoin, which resulted into this big candlestick and price moved all out to the upside. This means these guys are still holding this position. The moment price comes back into this position, these guys are going to be willing to come and buy back into Bitcoin to make sure that they defend their position. So that's how the game plays. So we see BTC coming back there, possibly to cover that gap. But this to happen, it will be a news that has only to deal with crypto to play out. It can be about the spot ETFs being rejected, and BTC dumps back to here. After this being filled around here, just anticipate that price will now start a move to the upside. Yes. Now, a move to the upside will be that BTC will have to give us this kind of move from there. Okay. And in another context of what junior traders do always understand is that we have what we do call the heads and shoulder patterns when we look here. So this is the first shoulder, these are the heads, and these are the last shoulders.
Okay, well, as Frank has given us all that information about Bitcoin, I am sure that current traders have picked a lot from this discussion, and future traders as well. But coming from Bitcoin, I would want Frank to give us more information on Ethereum as well, as it is a highlight within the digital currency space.
So we are going to do ETH/USDT today as well. Let me access the chart. This is the Ethereum USDT chart. Remember, why are they backed with USDT sometimes? USDT is just a cryptocurrency that is actually paired 1-to-1 ratio to a dollar. So this means that the USDT is just equivalent to the dollar price. So when dollar pumps, this will affect negatively the price of the cryptos. I repeat that. So this is what is happening on ETH right now. We are seeing Ethereum slightly pumping. Let me try to give a boost on the chart so that we can simply view the entire charts. So you can see what happened yesterday right here. Ethereum did what? Pumped, but now dumps. And another thing, for traders are familiar with this, that whenever you do receive this kind of pattern, is called a bearish engulfing candlestick, whereby the bears are too much that they are engulfing the first buys, which were the green candlestick. Okay. So this confirms a bearish reversal kind of candlestick. Yes. Now, if we do have a bearish reversal there, that also causes Ethereum as Bitcoin to be going slightly down for the dump first. You can simply get this, possibly back to here, very possible, and then like Bitcoin to the downside. To the downside. Possibly like that. But now, another scenario is this. A direct start of a dump all the way to the downside is also possible on Ethereum. Okay, thank you so much, Frank, for that highlight on Ethereum.
would want you to give us a little more advice on cryptocurrencies, as so many young people out there are wishing to get into the cryptocurrency world. They want to understand more about how blockchains work, and there's so many coins coming up here and there. Would want to know what exactly we can trust and what we can afford, because of course not any average person can start trading digital currencies from Ethereum and Bitcoin immediately. So we'd want to understand, could you give us like 2 or 3 that we could trust and give it a shot and see how it goes?
Okay. For a beginner, the best trust will be in the first 11, because the higher the market cap, the better the coin is. Now, the first 11, we do have Bitcoin, Ethereum, XRP, and we also do have Solana, we have Phantom, they're all there. But now, for cryptocurrency, if you want to make money, it is a game of being early at the game. Being early at the game, I mean you need a cryptocurrency that doesn't have really a big market cap, because the smaller the market cap, the easier the coin can be pumped.
Is that true?
That's true. So Bitcoin right now is in billions of money. So for you to move Bitcoin for 10%, you require other billions of money.
Yes.
Now, look at a coin like the one called Meta VPAD, which is around $1 million by market cap. We only require $1 million to move Meta VPAD another 100% to the upside.
Okay.
So that $1 million in a crypto market is just a drop in an ocean. People can easily invest in that in there, and then Meta VPAD starts to pump to the upside. Now, our viewers are getting confused. What is which? Which one should we really do? So they are like, should we buy the blue chip, which is not easier to pump, or should we buy the low cap? Let me tell you one thing. Low caps are always risky but more rewarding. Big caps like Bitcoin are always safe but less rewarding. So now it's all about your investing plan. If you want to make a lot of money, I don't advise Bitcoin for you. Leave it that with guys who can invest their huge amounts of money. That's like $1 million, like $10,000. Those guys are going to make money on Bitcoin. But if you have like a small capital, you have 1,000, you better go and look for the low cap gems. And what are the factors to consider before you invest into a low cap gem? One, you should be jumping on that one that do have a well-verified team behind it. A team behind it is really, really, really important. You should also look at the utility. What is it offering within the crypto space? Now, for the Meta VPAD is a launch pad for all metaverse projects. So the moment metaverse projects are going to be pumping, we are anticipating that Meta VPAD is also going to be pumping, because it's a launch pad. Everyone who will be willing to bring in a metaverse project, likely they are going to launch it via Meta VPAD.
For sure.
If metaverse is to pump again.
For sure.
So this is how we do look at these things. But for you who want to learn more how to navigate the markets like this, then that's where we require you to go and look out for Mitro Plus Labs. Sign up for our free courses. Then you can be an expert in knowing where to invest, when to invest, and how much to invest.
Okay, well, another question I would have is, we've been getting cases of coins declining or falling until they're out of existence, and that is what most viewers would be scared about. What if I'm looking at a low cap and then I just lose everything?
Yeah. Now that's what we do call that risk. The moment you're looking at a low cap, you can easily lose it all. I want to be sincere with you. You can easily lose it all, but that's where the use case comes in and the team behind it. These people who are behind that project should be well-known people in a space.
But as financiers, the bigger the risk, the bigger the reward.
Yeah.
We still encourage to go with the low cap so that you can at least see something come out of it.
Yeah, but this is a caution. If you do have your big money, better not to lose the big money, but you just put the big money into a big project.
Certainly.
And then you get that.
Certainly.
That one's also really working.
Before we leave the digital currency space, I would want you to give us a little more information on blockchains as well.
Blockchain is actually the internet of the digital world. That's how I normally just make it so easy. Blockchain is just like the internet of the digital world, whereby we have digital money, we have everything digital. For a layman, in a layman's language, for everyone to understand, blockchain is just the internet of digital money. So blockchain actually is not as well only restricted to digital money, but a lot more can be done on there. For example, gaming, you can access banking, you can access creating of wills. Any document can be created there. It's like the new digital market. Call it Web3. Web3 is blockchain. So that's it. Blockchain is the new internet. We are moving away from this Web2 that we are used to Web3, which is blockchain.
Okay, thank you so much. Before you know, this digital currency space is also a really wide space, and I wanted to put a lot of highlight on it, especially for our viewers, so that people can at least stop that narrative with the digital currencies. There is something we talked about layers, layer 1 and layer 2. Do you happen to know anything about them?
Layer 1, layer 2s. Now, layer 1s, they're like the blockchains themselves, whereby a system can be built on a layer 1. Layer 2s, they normally come in as sockets to the layer 1s. These ones, I'm just explaining this for everyone to understand this. Layer 2s are here to fix the problems that are occurring in layer 1. Let me give an example. You have an Ethereum blockchain as a layer 1, but on top of Ethereum, built is Polygonmatic to improve the scalable solutions on Ethereum. So we are increasing these layers in order to solve the problems. That's how we can understand it the simple way.
Thank you so much. Ladies and gentlemen, that has been Kanabi Frank for today. He is very profound. He knows what he is talking about. And I can assure you that everything that you have had is quality information, and you need to consider it while you involve yourself within the space of financial markets and trading, whether it is Forex, whether it is crypto. You need to have picked a leaf from this interaction. So for today, I would like to thank you for joining us, and I want to thank you so much for paying attention for this while. Thank you for being here, Mr. Frank, and all the insights that you have provided. I would like to thank you so much for being here for the show. And ladies and gentlemen, we have come to the end of this show. It has been Victor Chiberu alongside
Kanabi Frank.
Thank you so much. See you tomorrow.